Hello, everybody. Monster of a show today. Uh, as usual, we take the top questions that are on investors' minds and how they can get ahead, especially during these very transformative times. So let's go. This video is about allocations, rotations, timing the market, how to build a bag, and some of our old favorites as well, including revisiting the retire on cocktail model from just over 7 months ago. I put out so much content. I don't even remember. One of the things about me is I like to always run ahead and never look back, unless it's to learn from a mistake. It's very important. But we'll talk about that retire on cocktail. We'll do a big comparison between Bitcoin and Tesla and how they stand right now and how they stand with that model. We'll talk about robotaxis and Waymos. Ton of questions on Tesla. And the question is really, is now the time to buy, or is it time to just leave it and put it down to a bad experience, like a bad date or something? We're going to learn about how to securely leave your inheritance to loved ones. Another cool question. Fed rate impact of a pivot, saving wildlife down under, and so much more. Let's go. And big thank you to everybody, mods in the chat. Disclaimer, none of this is financial advice. I'm just a guy on the internet, but I do share everything I do openly and transparently. That is one thing about me. And all the questions come from Patreon. Shout out to the Patreon team. First question is from cable.mba. How do you evaluate in the ETFs how much Bitcoin you possess control? If you have, for example, 200 IBIT and 100 FBTC that were bought at different prices, etc. Great question. And a lot of people do this. And I actually built a little model for this. I'll share it on Patreon later for those who want to plug in their own numbers. Just file, make a copy as usual. But the easy way to think about it is as follows. First of all, how to calculate. You have 200 shares of IBIT, 100 shares of FBTC. You calculate the NAV should be close to the share price. That's the net asset value. The IBIT, 200 shares times 36.67 is equal to about 7,334. FBTC, 100 shares, $56 a pop, about 5,600. And you calculate your total holdings. The easy way is to total them together and divide by the price of Bitcoin. And that should be approximately, 0.2 of a Bitcoin. The other way in the model, there's a slightly more refined way to do it. And you can put in your cost basis or whatever here. But you really have to measure it as of the point in time, because every day these ETFs buy and sell Bitcoin. All right. So whatever your purchase price is to today, that necessarily shouldn't impact the amount of Bitcoin that this ETF holds, because that will grow or shrink depending on the actual ETF. So here, there is a slightly more refined way. For example, IBIT, currently at 36.67, it is trading at a 0.21% premium. So you shave that off the net asset value per share, takes us down to 36.59. So your total value is 7,319, which is about 0.113 of a Bitcoin. Your FBTC, 100 times 56, the premium discount is 0 right now, but that's going to change because remember, the crazy thing, I always joke, you can tell your grandchildren used to live in a time when the markets were closed in the evenings and weekends and only open 17% of the hours available to us. It's ridiculous. And we'll talk more about how I would be different if these types of retirement accounts were trading 24/7 and that they were trading things like Solana. We'll get to that later because all the action happens after hours, not in the time between 9:30 a.m. Eastern and 4 p.m. It's ridiculous. Anyway, back to this. Fidelity, you've got about 0.087 of a Bitcoin, and combine these two together is 0.2 of a Bitcoin, with the current price of Bitcoin at the time when I did this was 64,522. It pulls in a real-time feed, not only for the stocks, but also for Bitcoin. Again, I'll share the model later. Bitcoin, as I speak, is 64,850. So it's gone up $300 and that impacts everything as well. But yeah, it's just a head scratcher the way we deal with markets that are closed evenings and weekends. Next question from Ryu001. Recently, you mentioned a question posed to you by Sanjay. And Sanjay heads up our research here on the team. Is 1 Bitcoin and 100 shares of Tesla enough to retire on? And with that in mind, what would you consider the best retire on cocktail that requires the least amount of funds right now? Good question. So it is more difficult to give you a precise answer, but what we will do is walk back in time 7 months. And I found this so interesting to look at last night, punching through all this stuff again. This was the Retire on Crypto cocktail, Retire on Cocktail, not crypto, but crypto and proxies 7 months ago. And it is stunning to see what happened. It was like, I knew certain things had done very well, but wasn't really sure how well. So for example, this was the model. These were the prices of the assets. This is the exact sheet that was shared back in late August 2023, a little over 7 months ago. And the prices of Tesla was $245. The price of Bitcoin is $29K. MicroStrategy is $373. And Solana was $24. Woohoo. Let's look at it today. And, you know, people always mocked me. There was actually a comment on this video. Somebody saw this video coincidentally on Friday, and they said, that was the saddest thing I've ever seen. And I so regret not watching this video 7 months ago, because it would have been life-changing to me and my family. I can't remember the person's name, but I feel for you, buddy. But there'll be plenty more opportunities, and we'll explain why in a minute. But this is the performance just in 7 months. And the whole thesis of the video was, could you retire on a $30,000 investment today by the year 2032? And I proved that you could. This is the performance only after 7 months. The bag has 3x'd, actually 3.08x'd so far. But a big thank you to a couple of things. One, we have, if you spread out evenly, you put 30,000, you spread it out, 7,500 to Bitcoin, 7,500 to Tesla, 7,500 to MicroStrategy, and 7,500 to Solana. That bag has gained $40,000 in value and is now worth $92,394. So 30K became 93K, 92K, given, depending on the time of day. Actually, at the time when I did this, again, this model updates real time. Bitcoin's at 64.5 and Solana's at 151. So that's, Bitcoin's already higher now. So this return is actually higher as well. And again, it's crazy that half of this bag is in static equities, proxies, which don't trade 24/7 yet, sorta, kinda. Anyway, this is the return. Now, this is the importance here. There's a couple of things. There's a whole bunch of lessons scattered throughout this video today. This is my definition of diversification. Okay, so let's break this down. You can see here the Tesla bag has fallen 39.98% on the dot in 7 months. It has been a brutal 7 months for Tesla. We'll talk a lot about that later as well. Bitcoin is up 120.26%, MicroStrategy 223.06%, and Solana up 529.17% over the last 7 months. So basically, when you break this down and look at the actual detail, your whole, the whole, and I say this sometimes, you allocate in this disruption. Even if one of these assets go to zero, say for example, Tesla goes to zero, it doesn't matter because the returns on Solana far exceeded the investment in Tesla. $40,000 was made on Solana profits in 7 months versus $7,000 invested in Tesla. Okay? That's how you need to think about these things. Diversification is critical. And there are times when I start making videos, you know, raising alarm bells. And I did this when Solana was at $8. Is Solana dead? The whole world called it dead. It was at $8. I threw the kitchen sink at it. And now you can see it's $152. Anyway, and that's in a short window of time too. So let's get back to this as well. The other thing I did say, which is quite prophetic about 7 months ago, was we have until April 2024 to DCA. It is April 2024. And this was the amount that you had to do a monthly DCA on, depending on where you were, the amount of weeks you had to layer in, and etc., etc. And then the other thing that we had in that video, this is kind of interesting because, again, the time has changed. But I had an illustration, which I've updated for today's numbers, is the cost to build a bag, $1 million bag, a $3 million bag, a $5 million bag. And I always think that's so fun. It's like, you know, there was somebody in the community said, a very young person, with very big ambitions. They said, I want to retire by the time I'm 30 with a $30 million bag. So I thought sometimes you can have stretch goals and sometimes you can have crazy stretch goals. But anyway, I just thought that was interesting. But here, what's interesting now, this is based on the 2032 bear target prices for these assets. My bear target for Bitcoin, worst case scenario, is $331,000. And my bear target for Tesla, worst case scenario in 2032 is 2,681. Now, if you want to build a $1 million bag today, you need 373 shares of Tesla. That would cost you $54,000. And it's cheaper than it was 7 months ago, a lot cheaper. If you want to build a $5 million bag, that'll cost you $274K. Now, to build a $5 million bag of Bitcoin with the same amount of future projection of $5 million bag, you will need to invest $980,000 today. You will need 15 Bitcoin. Again, based on the bear case. All right. So what has happened here since 7 months ago? Okay, we've got 3 assets that have gone bonkers. Why invest? I'm not a Bitcoin maxi. I'm an alpha maxi. I invest in high risk disruption, but I spread it around and I spent an inordinate amount of time picking winners. Okay, CleanSpark, classic example. We'll talk about them later too. MicroStrategy. I was the very first one to ARB MicroStrategy in August, September 2020 when nobody even knew what it was. Anyway, the point is, Bitcoin is safe, but it moves slower. Tesla is also safe, but it has suffered the worst storm ever. But remember, a little over a year ago, it was at $104. So this shouldn't surprise us down here at this level of 147. Also, MicroStrategy has been bonkers, but Solana has been completely bonkers, blowing my expectations away. So the point is, right now, the short-winded answer to your question is when things are very, very cheap, you buy with both hands and both feet. You grab all you can. That was me when this puppy was at $8. Literally, I emptied all the fiat I had and I threw it at it. I didn't care. My bull target when I did it at the time was $100. Okay, so that's what you do. So right now, crypto is in a bull market and Tesla is in a bear market. Do you buy bull assets in a bull market? The answer is you can nibble, but do you buy big when assets are in a bear market? The answer is yes. Okay, real simple, real crude. You buy relative value. You buy all the Bitcoin you can buy at 16K. You buy all the Solana you can buy at $8. You buy all the CleanSpark at $2. All the MicroStrategy at $190, all the Nvidia at $160, all the Meta at $93, $94. That's what you do. When they are cheap, you go crazy. That's how you make the big gains. You don't make big gains buying Nvidia at $900. Fact of life. You get in early, you get in hard. Next question. And by the way, a lot of these questions kind of dovetail together because every week the same issues are all on your minds. Now, there is massive concern about Tesla right now. Massive concern going into earnings next week. And I will be ready and I am excited. But let's talk about this question from Napalm DL. Waymo, owned by Google, already has self-driving taxis in Phoenix, Los Angeles, San Francisco area. Is Tesla late to the party, given Google has the first mover advantage? And if we are so optimistic about Tesla's robotaxi narrative, what does that mean for the stock price? And how come we've not seen similar explosive movements in Google's price? So first of all, Waymo is a separate kind of entity. The Google invests. I don't think Waymo has an impact, but that won't matter anyway. You'll see in a few minutes. And let's talk about this whole area. First of all, let's break down Waymo pros and cons, because we get this all the time. It's like, robotaxi, why big deal? They exist already. It doesn't matter. No, it does matter, because the pros of Waymo, and I'll be very objective as I always am and straight. They do operate in these places that you mentioned. They use a combination of LiDAR, radar, and cameras, which provides a high level of accuracy and redundancy in its perception system. The thing is basically It's like a nuclear submarine with all these sensors on it. Anyway, it also has a network of stops and customer-facing apps. So yeah, it can be used. And it's the only one in the US with an actual product you can ride in, because they had to shut down the other one recently, which I won't talk about. The cons, however, they are only operate in a very limited area, and they can only use very high definition maps. And in fact, these maps navigate around dangerous situations like roundabouts, like blind left turns, etc. So if you ever get into a Waymo, and I've been in one, they will go a big roundabout way because they take safety first. So if you've got time in your hands, it's a good opportunity to ride in the car for a little longer. They're also expensive. But the vehicle equipment and the vehicle itself starts at about $180,000, which means it's completely impractical and not scalable or cost efficient. And it does require remote takeover as well in emergency situations. And it has to take longer routes, like I mentioned before. And they're burning through money with no proof of profitability yet. Remember, and I get this question regarding things like solid state batteries. Yeah, you can make a solid state battery. Yeah. But you know how hard they are to make and how expensive they are to make? They will never be a world solution. Okay? Very, very important to consider. Same thing like this. It's too expensive. Let's talk about Tesla FSD. Pros and cons. The pros: works in any road, even unmarked roads, even roads under construction. All this crazy stuff, and it makes it far more scalable. It uses vision, just like a human. It uses eyes to see and a brain to think, which is what they call the neural net. And it learns as it goes. Also, it can be deployed to a large number of Tesla vehicles. They can technically activate 6 million of them if they wanted over the air. And that when that day happens, that'll be the biggest wealth creation in the history of the planet. Also, FSD vehicles can navigate with 0 disengagements. I've done it before. I do it every day. I use it every day. And it's very cost effective. And it is what Elon Musk calls baby AGI, artificial general intelligence with neural nets. The cons, however, it still requires supervision. You still need to sit there and wiggle the steering wheel every 2 minutes. It's called a nag. And the system, again, requires the driver to closely monitor and take over in the case of unexpected scenarios. It's not perfect yet, but it is 99% there. And it can do the hardest edge cases already. And they just released the new version as well yesterday. Now, Waymo, quick reminder, you can see here it's outfitted with radar, LiDAR, vision system, and all this stuff. It's really, really expensive and really ugly. When you see these cars and you see all the equipment hanging off of it, it's just not practical. And Tesla is all about scale. Everything they do is about scale. They send rockets into space and they reuse them 20 times. They have one that just got shot up in space again for the 20th time. Again, it's all about massive effectiveness and massive efficiency. You hear me talking about that all the time. I call it E squared. And again, Waymo cannot scale. Too expensive, the car. LiDAR doesn't work in certain situations. If a leaf blows onto it, the car disengages. If the weather's bad, the car disengages. Tesla FSD works in very inclement weather as well, and it's just a better solution. It also has billions of miles on it. Waymo does not. And again, the cost and complexity will kill Waymo. No ifs, ands, or buts. Now, this next question is tied into the previous question. You're going to see a bit of a trend here. And then we'll talk about CleanSpark in a minute and a new token as well, a new layer 1. With the 7-year horizon, what would you do with a large bag of Tesla that's down around 30% or more right now? Just hold and wait for the full potential of Tesla to be realized, or burn in those losses and swap to MicroStrategy CleanSpark now and try to recover before that happens in a tax-free account, so no pure crypto. I like what you're thinking, and the truth is CleanSpark will probably outperform Tesla up until 8th of August. Then we don't know what's going to happen. That's when they're going to announce the robotaxi. But again, analysts, stock market, they don't understand this company at all. So Tesla is entering a massive transformation. It will take time for this to be reflected in the financials and Wall Street analysts. So I do think CleanSpark will outperform over the next 6 months. Not financial advice. But you have to bear in mind, and you're tax-free so you can swap at the turn of a dime. What is super interesting is this. And again, we don't know what's going to happen. One thing I do know, and I talk about this a lot, is over the next 3 years, AI will get 1,600% better. Okay? That is unfathomable. This is Tesla from Søren Basher, friend of the channel. We are here, okay? And that is Tesla in the year 2032, 2033, based on autonomy, energy storage, bots, other services. This is very much very reminiscent to me of Amazon in the year 2001, which I was in. And what people also don't realize is the pace, and I tweeted this the other day, April 19th, the stock, yes, it's in the toilet, and but development is speeding up. They just launched 12.4, which Elon Musk says it should be 13. That means it's a big step change in performance. 12.3.4, which I have, is already mind-blowing, and the stock market has not priced in the fact that they can sell a car, a Model Y, the best-selling car on earth now, with tax credits in the US for under $30,000, and it drives itself for $100 a month. People still don't get it. Søren Basher gets it. Sasha gets it. Now, this is the Amazon chart as well. Just for some perspective, these things will come and rebound gradually. The value will be seen, but sometimes it takes a long time. But the point is, when you see these drawdowns, they are opportunities. And this is Amazon on 2001. Just for those who weren't around for this, everything was strong in the stock. Every metric was peaking up, and I was analyzing it at the time. The market hated it and did not understand it. And then, since 2001, it's gone up 161,000%. That's Amazon. And stocks have their problems, and stocks are not understood by Wall Street. Wall Street are paid to understand them, but they don't. And it's funny. The brain trust within retail investors today far exceeds that of analysts on Wall Street. Far exceeds. And I promise you that. It's like the media. You get better news if you curate your sources on X better than any newspaper or magazine out there. That's the difference. Now, from Søren Basher again, Tesla is a broken stock. Nvidia is a broken stock. So is Amazon, Microsoft, Apple, Meta, Netflix, and the list goes on. And a broken stock doesn't mean a broken company, but more likely it's associated with a negative narrative. By the way, each one of those names I have owned and traded heavily in the past. Now, sorry to go long-winded on this, but it's so important. A lot of people are scared. But when people are scared, that's the time. That's the time. And you can come back to this video in 5 years, you'll see. Anyway, automobiles are one of the worst possible business to be in, okay? They're capital intensive, they're low margin, not a good thing. But Tesla is not an auto company. You know, Elon Musk says it's a AI robotics company. And the real value is its auto fleet and its unparalleled ability to source edge case data for Tesla's optimal development of real-world AI, which is FSD, and of course for the Optimus bot. And Tesla investment case rests on the company's uncanny ability to solve deep tech problems and make things like nobody's ever made them before. When I first stepped into my Model X over 5 years ago, I used to say to people, this is the car unthunk. Everything that was superfluous in a traditional car that I drove for years, and I drove nothing but BMWs for 25 years, it was just better. And there was no nonsense. There's no handbrake, no silly stuff. You know, doors open themselves for you. It was just incredible. That's where we are today. And final thought on this one from Sasha. This is very funny. Do you know why stuff is suddenly happening at Tesla? Prices actively changing, FSD releases coming every 10 days, restructuring and deadwood being removed. Elon is back in the house and he is miffed. While he was fixing other priorities, some senior executives took their eye off the ball. Now he's back. Others were pressing in the wrong direction in spite of agreed strategy. The culling was not a coincidence. Cancelling the India trip with Modi was not a coincidence. The sudden surge in FSD progress is not a coincidence. The launch of the robotaxi on 8/8 is not a coincidence. There are a few things better than a peed off, hyper-focused Elon with his back against the wall. Maybe this is the kick in the nuts that unleashes the Elon. Stock up on popcorn. And as I always say, there's no such thing as a coincidence. So I love that from Sasha. this is an interesting time. I stack every opportunity. The deeper it goes, the more I buy. Okay? I call it DCA on strategy. DCA on strategy. DCA on steroids. Oh, long day already. Long weekend. Next question. Ties into CleanSpark, one of our other favorite proxies. I have a decent amount of CleanSpark with a dollar average of 16.75. I was thinking of selling calls on shares. I'm tinkering with the idea of generating some money on this dip, but worried about a bounce. Thoughts? You should be worried about a bounce. Let me explain why. First of all, yesterday or the day before, they had record fees. And this has only happened 7 times in 15 years. The average Bitcoin fee paid per block has only surpassed, again, the subsidy on 7 occasions. Of course, it's not going to last long, but what it does mean is the miners made bank, a lot of it. Now, let's look at a chart as to why I'd be concerned selling calls here. One, the market hasn't factored in the amount that miners are going to make. I expect them all to rally hard next week because they made so much in fees, and that will impact Q2 results, not Q1. We'll be getting Q1 results for CleanSpark soon. But I would not sell a covered call until we get to about the $22 level. This is the LILO model here. And you can see it's been very, very precise at nailing exactly where support and resistance are. And what's also cool is how you can actually play the ranges. We'll talk about how those ranges are played. But for example, you can bounce. You can sell a covered call at layer 6, covered at layer 7, and then cover it back at layer 6. Or sometimes you could actually stack more at layer 6, sell it at layer 7, or swap it into another asset. The limits are endless. And this dovetails into another question regarding how to build your bag. So cover calls, not now. Cover calls 22 plus, and watch the trend very carefully. So this one is tied into kind of how to stack using layers. From TSK 264. I'm 88% Bitcoin, 12% SOL, and since November 2023, I've focused on stacking SOL with my monthly disposable income. I want to learn how to develop an effective LILO strategy for my SOL relative to my SOL bag. What percentage cash should I maintain on the sidelines, ready to layer in, buy the dips, and should I always have targets to layer out and take profits and replenish the cash bag? Yes. So I always say, I've been saying now for 25 years, know your exit before you enter. Very important. Let's talk about how I think about layers and sniping and building bags. So if you start with the teal color here, always have a cash reserve for buying. I have a cash reserve right now, and that is going to be earmarked for something like Tesla if the price gets to my target next week. I always try to have at least 10 to 20% of my portfolio in cash. Very important. And that gives me the agility to respond to dips and avoid cash drag. The thing about cash drag is very important there. That last little greeny bluey box. Cash drag refers to the negative impact on the overall performance of an investment portfolio caused by holding too much cash. And having cash available is good, but set yourself a time limit. If you are holding like 20% cash, never hold it for more than 3 months. Always have it like a fuse because it is a melting ice cube. A good friend of mine, I've been trying to convince him to buy Bitcoin for 7-8 years. It's been sitting on $600,000 cash since he sold a condo, I think about 4 years ago. The bank pays him nothing. 600 grand. Okay, imagine deploying that. Anyway, doesn't matter. Woulda, shoulda, coulda. But the point is, he didn't. Don't hold on to cash too long. Also, layer in, layer out. Layering, we'll show you a couple of charts on this. And not only is it good for sniping levels to add to your position, but also when to get out. And you can do that in these very volatile markets too. Set your predefined levels. For example, you could sell 10% or 20% for each gain, or sell 10% for each 20% gain, whatever. We are working on an optimized model for profit taking. It's going to be ready for the top of the bull market. And also, it's so important as well to lock in gains and rotate. So this relates back to what we mentioned before with the retire on cocktail. Okay, you've seen one asset make a massive return, It's prudent at one stage to take some of that off the table and rotate it into the ones that haven't gone yet or have sold off. That's the magic of really compounding to the power of compounding your returns. Now, the other part here is be focused. Again, implement the strategy. Start by knowing your exit before you enter. Use the LILO model that's built specifically for this and have the plan. Without a plan, you are nothing. Plan your entries and exits. And again, I'll repeat it. Identify those levels. This is an example of sniping. Thursday night, it was 9 p.m. Pacific, and I bought a bunch of Solana at $129, and I did a real-time trade alert. That went up 18% in a day and a half. Okay? So if you don't have the cash ready to pounce on these opportunities, you go in and grab. And I could clearly see as well from the chart that was a solid support level. Just sub 130. Bounce, 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 bounce. And despite the nerves of stuff that happened that night, it bounced right up. Now, taking a longer term perspective, I think that was a 5-minute chart. Here you can look at the layer in, layer out model layers on Sol. And you can see here how it clearly bounces up, hits resistance, falls back down to a certain layer, bounces up again and falls back down. In fact, if we look at the heavy buys at level 7, which is $91, it rode through layer 8 to 132, and then it went straight to layer 10 at 210, and then fell back to layer 9, 177, went back up to 210, and then fell all the way back to level 8, 131. If you got the tools to be able to help you time this, watch the trend and be prepared. You can hedge at tops, or you can take profits at tops and then build your bag by selling at 210, buying back at 131. And that's a great way to explosively increase your bag size. Next question, which is a common question from many people, is how do you leave crypto to loved ones? And there is a new solution in play called Superbacked. And this is from Renaissance Gamer. Would Superbacked be a safe way to encrypt our true seed phrase inside of a metal seed phrase storage device and only allow ourselves and or heirs to access the real seed phrase with possession of metal seed storage device plus Superbacked? So I kind of like this idea. It's good to break it up. Let's break down what Superbacked is first, and then we'll talk about some of the risks associated with this. First of all, Superbacked is a software designed to create encrypted backups of your seed phrase, and it essentially allows you to create these multiple QR codes that you must be assembled together in order to unlock the secret. For example, 1, 2, 3, they are in sequence. If they are jumbled up, they won't work. But this also allows you to create a non-custodial inheritance strategies to safely pass on the Bitcoin to your heirs. For example, you can imagine if you create a 2-3 scheme, the software will create 3 QR codes where 2 of the 3 are required to unlock the secret. Now you can keep one and give one to, say, your wife or your husband or your loved one, and then maybe give the third one to your attorney managing your estate. Or you could lock it in a safe deposit box and then give that key to your attorney or the instructions or whatever else. But hence, should something happen to you, your wife, your loved one can still unlock your Bitcoin by retrieving the backup block from your attorney without your attorney ever been able to unlock your Bitcoin. Not saying you can't trust attorneys, but this is a cool little system. Now, this is what it looks like, how it works. The way this works is you install the program and you put it on a secure offline computer. Very important, all right? And you will need this computer connected to a secure air-gapped printer. I'll talk more about that in a second. But it's critical that the computer you run the software on never touches the internet to ensure maximum security. And then you use the program to encrypt and cryptographically split your seed into these QR codes, QR blocks. And based on the website, Superbacked is using the industry standard. It's a Shamir secret sharing to split the secret and create these blocks. And then you can print these blocks to your secure offline printer. Once they are printed, give one to your attorney, one to your wife, etc. And to decrypt them, all you need to do is use your computer's webcam to scan the blocks in order to reveal the secret message. So the secret here is novel, huge, wolf, hover, etc. Passphrase to get in is bacon, last, groom, cola, small. And you pick your distribution type, and that's it. Super logical, super clever. But remember, make sure your machine is air-gapped and your printer is air-gapped. It is absolutely critical. Okay, air-gap, quick reminder, is a security measure for securing a computer network by physically isolating it from other networks. It doesn't touch the internet or any unsecured local area network. An example of an air-gap network, you could have your computer connected to a printer, connected to a storage device, etc. But these things can never, ever, ever go online. All right? Because the internet is where bad things happen. So make sure you do that too. Otherwise, the whole thing is nonsense. Now, there are some concerns with this as well, and our job is to point them out. Overall, we love the idea, and a shout out to the team member who helped me with this. We love the idea of Superbacked, and it's very easy to replicate and create better ones from maybe more trusted players. But here, making crypto inheritance easier is very, very important. And Superbacked is a very inexpensive way to do it. And overall, it can be part of your inheritance strategy, but it shouldn't be the only thing you rely on. And there are a few concerns that we have about this. First of all, the software is very easy to use, but creating the secure environment to use the protocol safely still requires some technical skills. Setting up a secure computer, safely putting the software onto the computer, properly set up an air-gap printer to print the blocks, etc. That can be tricky and a little more complex than just paper and ink. Also, this can cause the QR code to become readable if it's worn, and that could give you trouble retrieving your crypto as well. If you lose those papers, that could be a problem. The other concern we had, the second concern, is the lack of documentation on what exactly Superbacked is doing. And being a closed source software gave us some pause. We were not able to find any detailed documentation on exactly what it's doing to create blocks. Ideally, the software would be open sourced, but if not, then at least provide more documentation about the encryption schemes that are there. And then lock-in is another issue. According to Superbacked, if they go out of business, they will open source their software code. That way, anyone who used it in the past can still create blocks, can still retrieve their secret. However, we don't know if they're going to do that or not. So again, a couple of risks to be aware of. It's an interesting solution. I don't know why there's not more of these. Super simplistic. But I like the way you're thinking as well. Take the output and find a way to hammer it into a plate. But hammering a QR code into a plate, I don't know how hard that is. But the simple way would be just breaking up the seed into multiple parts and giving a part to each player. Make sure they know the actual rotation and the sequence of these actual seeds as we go forward. So super interesting. We'll monitor this, and hopefully we'll find some more solutions that have come from more players that don't have the risk of maybe disappearing or going out of business. But remember, air gap is key. Next question is from Mito22. TON has been a very resilient token even in this bear market and is backed by Telegram, who has 900 million users. Do you think it could become a competitor for Solana? Interesting question. And yes, we've seen TON break into the top 10 as well, displacing Cardano very recently. I don't know where it is right now, but there's a lot of mixed stuff out there. First of all, you'll see reports like this: TON becomes the world's fastest blockchain. And then you see stuff like this. Then this on X. TON blockchain was taken down by a transaction peak. TON is currently doing 1 transaction per second, falling short of the 100,000 transactions per second, the most scalable blockchain ever. Then you go right now, current TPS 35 as we speak. And the other thing that I like to look at is the use of the chain. What's the breadth of dApps, as I call it? And I've tracked all the chains and calculated how many diverse dApps that they have. When you look at the dApps on TON, it's all wallets and NFTs, pretty much it. And the final point Even though Telegram is a messaging app, the compendium score on the token is horrific. Not something that we would touch. Again, it's a messaging app like Discord or whatever else. It is an L1, but again, the messaging app is not the blockchain. It doesn't mean there's 900 million users using the blockchain. And the data was kind of hard to track and hard to dig down. And no, short answer, it's not a Solana killer. Not by any stretch. And it's still, we'll see where it goes. But we've seen how hard it is to make L1 scalable as well. So we'll see where all this goes. We'll track it carefully, but right now, not a threat by any stretch. Final question, I think, if I'm not mistaken. No, second to last question. A lot of questions this week. The last 6 Fed interest rate pivots since 1970 have historically seen a 27 to 58% decline in the S&P 500 in the year that follows. If we're expecting a pivot anytime soon, is this, and because Bitcoin is a risk asset, won't this ruin this cycle's bull run? From Crypto Carnivore. Super interesting question. Let's go back in history. And I've lived through all of these, unfortunately. So first of all, when the pivots happened in the past, there was like inflation crises and oil crisis happening at the same time. Then in 2000, there was the dot-com bust. Then in 2007, there was a global financial crisis. And then C19 in 2019. And there was also a little bit of financial scare in late 2019. And then the C19 happened. And right now, we're expecting another Fed pivot. But I've said this a lot, that maybe this time is different. So yes, these are pretty alarming statistics. But normally, the Fed has to cut in time of emergency. But right now, the Fed has to cut for other reasons, which aren't exactly related to emergencies, but there are still some crises out there. First of all, if you look here, there is too large amounts of money that the government has to pay in interest. And this is the same all over the world. This is the same in Germany, the UK, Australia, wherever you are, Canada. And those big bills are Medicare and defense. Okay? Right now, the interest on debt that the US has to pay will exceed both of those puppies. And those things are growing fast, especially Medicare with an aging population and defense with more turmoil in the world. But maybe they should stop spending so much money on defense and spend it cleverly on things that are more important, like AI and drones and stuff. Not the kinetic warfare machinery that is proven not to work in the world today. Anyway, I'm not going to get off in that tangent. But here, what is really, really scary is right now, the debt to GDP ratio is more than after World War II in the United States. It's crazy high, and it's going very higher. The deficit will go to $2 trillion soon, and Medicare spending will increase nonstop from now into the future because of the raising population, increasing healthcare costs, debt levels, etc. It's just, this is the whole house of cards. This is why I make Bitcoin videos, because people need a hedge against this. This is not going to turn out well. Now, not saying there are not crises on the horizon. By the way, crises, plural. Sometimes the armchair critics will say, you spelled crisis wrong. Nope. But here, commercial real estate loan defaults, they're going to happen. The commercial real estate sector is in a world of hurt right now. And that could be like a mini global financial crisis. Also, credit card delinquencies are exploding right now, which is really hurting your average retail person that has a credit card. Manufacturing slowdowns are happening too. The whole area is not very strong. General economic slowdown. The only thing that's growing right now is government. Government is printing, and it looks like GDP is up, but only for government entities for the most part. And then you've got your regional commercial banking sector that could go under. Not just commercial real estate, but also the banks holding the bags for commercial real estate could go under. And we have global economic uncertainty with all the stuff we've seen happen over the last couple of weeks. And it's not pretty out there. And US debt is rising by $1 trillion every 30 days. That's an ugly cocktail. We had a good cocktail before, but anyway. What's going to happen? The Fed have to cut. They're jaw-boning now. Whether they cut in June or July, it's an inevitability, but it'll be gradual, and then the markets will react accordingly. I don't think it's going to be like these times in the past, unless we have a black swan. So that's my thought on the matter. Next, final question from Pink Pony. Was Tesla FSD tested to cope with unpredictable kangaroos on country roads in Australia? I would love it if FSD technology reduces the number of roadkill on Australian roads. Being an animal lover, and it pains me to see this happens as often as it does. Imagine a future where FSD cars are the majority. It will save so many animals and lives. I hope. So it will. There will come a time where car companies will have to have a version of FSD installed, whether it's made by Tesla or somebody else, for safety reasons, because FSD is safer than a human driver on the average, and it will be a lot safer than a human driver within 1 to 2 years. That's pretty much guaranteed. Now, other automotive companies have given up. This is from Gizmodo Australia. They've given up on trying to develop crashes with kangaroos, but Tesla has not, and their FSD not only has been tested to cope with unpredictable kangaroos on country roads in Australia, dogs on country roads in the United States, koalas as well, and other wildlife. It can do all of that. It can also avoid potholes and puddles. And the next image you'll see is apparently an FSD Tesla. Not the picture of the car in the image, but the 3 chickens walking across the road. This Tesla is driven by FSD, and it anticipated the chickens were going to cross the road, so it stopped. Okay, so it can see a chicken. I don't know how heavy a chicken is, but it can't be more than 1 or 2 kilos. Maybe if somebody knows, I don't know. I don't know how heavy they are, but they look very small. So if it can see a chicken, it could probably see a big frog or a turtle or any of the other wildlife. So that's good news. And best part of the week, we donate to the Marine Mammal Center, and we are rehabilitating these animals. Zurich, that's a cute name. I used to live there. Nico, Raya, Annette, Kyo, Brion, and Lele Aka. Thank you so much for making this possible. And this video is dedicated to Axel Winter and his puppy Leo. So this is in your memory. And tomorrow we have DCA live, slightly earlier time than usual. It's going to be 7 a.m. We have Mando and CTO Larson. Due to scheduling issues and a new change in time zone, it's no longer fits with Ivan's schedule. Ivan is still a friend of the channel, and he will be back when Bitcoin hits 100,000. That's going to be a big celebration show as well. But Mando will be on tomorrow. Mando has great market knowledge. He knows everything that's going on in crypto, in macro, in equities, in geopolitics, and he's a TradFi guy like me. So it'll be a very good complimentary member to the team. Don't forget to like and subscribe. Thank you all. Thank you to the mods in chat. But now we get to do some live questions. Oh, I need to drink some tea. And again, I appreciate everybody who's here, including Michael Moore. Is that the political guy? That'd be fun if it was. All right, let me find the questions. Yeah, big thank you as well. The team that assembles all these questions while I talk. Mr. Shake, I am 33. I have only Sol bag. Once Sol's claims back 200 mark, I need to 4x my portfolio to achieve my financial independence. What strategy you advise to achieve that, assuming I can wait up to 3 years to achieve that? First of all, 33 and you want to retire by 36, that's incredible. Remember as well, markets are risky. Having everything in one bag is extremely dangerous. That could blow up in an instant and go to zero. So never do that. And just like the example we showed you, I have very, very high conviction investments, but I make sure they're not correlated to make sure if one blows up, I'll make it back on the rest and still be completely fine. In fact, Tesla right now is 15% of my overall positions. 15%. If that went to zero, it wouldn't affect me at all. But so everybody just think in terms of allocations. 100% in Sol is extremely dangerous. When we get back to the 200 mark, what I would do is practice getting in and out. I don't know what your tax situation is. If you do have taxes, that can be very painful. But if you can trade tax-free for crypto, then you have the ability to really grow your bag using certain models like the LILO model and the example I shared here as well. But remember, taking all of your net worth and quadrupling it in 3 years, it's hard. This last 18 months have been incredible. So it's been possible to 6x, 10x very easily, but you've got to be in the right things, and you've got to have, in some cases, options and leverage to protect yourself. So practice with small amounts, paper trade first, get to win 80 to 90% of the time, and then start allocating your bag, and do not hold everything in one asset. That is dangerous. Miles in Arizona. Everyone needs to vote for their Tesla shares. Lots of index funds will be voting against the comp package. Tesla is worthless without Elon. Yeah, well, that is a crazy situation. I heard that the top 4 holders of Tesla from index funds are urging people to actually vote for the comp plan to be reinstated. But I still don't understand how somebody with 7 shares can engage with a couple of law firms, and how a judge in Delaware can reverse a package that was agreed to 6 or 7 years ago. It's criminal. You can't give something and take it away. And anyway, let's hope the world isn't more illogical than it is right now. Thank you for saying that, Miles. Doc Intern, what happened to MicroStrategy? You think BlackRock dumping shares? When do you think it will recover? MicroStrategy, I think, has been issuing stock right now to buy more Bitcoin. They have that ATM model in place. I'm going to run some calculations. We have an automated inflation calculator, and I'll run that and share what I find on Patreon later as well. Charles Kincannon. By the way, the only explanation I have is that they are selling shares. And Michael Saylor is also selling shares too. I think he sold, I can't remember what it was, like 5,000 shares a week for the last couple of weeks to maybe buy. He said as well, he's hinted in an interview that he would be buying some Bitcoin for himself personally, on top of what he already has. All right, Charles Kincannon, thoughts on SDIG, which is Stronghold Digital Miner. Interesting approach, but did not see it on the miner list. And thanks for getting me to my second halving. My pleasure. So let's look at SDIG. I know for a fact, if I recall, SDIG had some pretty scary financials. And the reason I don't put certain things on the list is I don't consider them investment worthy. Their model is interesting, but sometimes when I look at financial ratios, I get pretty terrified. Let me see. SDIG, there you are. Right now, I'm just pulling up their financials. More financials. All right. First of all, they are losing. Let me see. They're losing a ton of money. All right. They got 60 million in debt. They have 4 million in cash. And they're losing money hand over fist. So, yeah, that's why. The last quarter, let me see. Last quarter, they lost $20 million. And they have 4 million in the bank and there's 60 million in debt. So for me, it's not an entity that's going to make it. They're either going to have to pull a miracle out of their hat or sell themselves, and that's just the reality of Stronghold Digital. Again, and for me, investing is risky enough already as it is, without having to get involved with companies like that, losing 20 million and only having 4 million in the bank. And Bill Wemmers, doesn't GBTC just drop rates? Why mini ETF? I think they're afraid they're going to lose the entire bag. I covered that yesterday. They are going to allocate 20% of what they have left to this mini ETF. People will be able to get an allocation in that tax-free. And then hopefully they'll be able to keep some of their bag. At least that's what they hope. I personally don't care if they disappear. It'd be good to flush that stain from the world. But yeah, they're getting desperate right now because losing over half their bag in 69 trading days was pretty stunning. Super Soul Man, lessons in posterity from the man. Thank you for the alpha. Thank you, Super Soul Man. And I hope your soul bag is treating you well. B-Man 63 have an equal amount of Tesla shares and Tesla $200 dollar synthetic longs for January 2026. Do you think I should swap the SLs for shares or lower price of the SLs? I think so. Let's put this on a timeline. Okay, you got until January 2026. They will be deploying things like the Tesla Semi, scaling that next year. Cybertruck will have ramped. The Model 2 in robotaxi form or whatever else form, people will know what it is. They got the robotaxi launch on 8/8, all in 2024, and 2025 will be an incredible year. And they have the energy business growing like crazy. Giga Shanghai is coming online in August. A lot of stuff is happening in August 2024. If you can always lower your position, sometimes it's very cost effective to do so. So yeah, if you could drop that down to the 150s or the 160s, that may be worth it, depending on what the cost basis is. When you sell a put as well, over time, they actually fall in value, so it's actually very much cheaper to buy them back. So that works very well on the SL side. The calls will also fall in value, but hopefully the hit won't be too much for that synthetic long. So B-Man, hope that helps. Thank you as well for your super sticker. Jeff Hammer, Daryl Anderson, Adam Q, DFKTX, Crypto Cruiser, Michael Moore, Staff, Glenn Joe, and Gabriel Belmonte. Thank you so much, everybody, for coming. I don't even know how long the show was. I don't know where the time is. 56 minutes. A long one, but lots of questions. Hope you learned a lot, everybody. Thank you so much. And yeah, thank you, Kay. Thank you, D&D Tesla, and everybody for coming. And shout out again to Michael Moore and everybody out there. I'll see you tomorrow morning. Bye-bye.